like. We're going to analyze a portfolio, and then we're going to dig into some of the new data sets that you can use independently to do research on the impact of a particular stock that the coronavirus has had on them with some new data sets that we've onboarded recently. So with that, if you have questions, don't hesitate to reach out. We have a couple of folks on the line who you can reach out to. Rovin Matthew, 1T. If you shoot him an ID during the webinar, he'll pass them over to me at the end of the session. When we wrap towards the end, we'll have plenty of time. You can just shoot me an ID at that point, and we'll get going. But I appreciate you guys forwarding questions to Rovin during the course of the webinar. So with that, let's set the stage of where the world has been during the week. Just taking a look at STW, I'll rerun the function so you see it the way it would wake up for you. STW is a fantastic monitoring tool which will allow you to understand what the market has preferred over a given time frame, broken down by characteristics, factors, drivers, whatever you want to call them. I'll explain exactly what we're doing here. Within the U.S., and we have several different universes that you could choose from across the world. I see there are some folks on the line that are coming from Latin America. We've just added 2 new universes just for you. If anybody is dialing in from Asia, we've added an emerging ASEAN, and we also have a frontier universe in addition to several common benchmarks. But focusing in on the United States, if we look at the past week, I'm going to toggle away from the monitor view into the movers view with really clean split screen. Over the past week in the U.S., looking at all sectors, there are a variety of different themes that have emerged. And what I'm learning in this view is it was a distinctly risk-on type of week. Our best performing factors were 1-month volatility, so higher vol outperformed. Companies with high sell-side expected return, that's your difference between the sell-side target price and your current price. Those companies that had a large potential growth as dictated by target prices did well. Companies that had high revenue estimate dispersion, where there was a debate going on where people weren't really sure where the values would come in, did quite well. Value, leverage, and buybacks all had been out of favor. Now they have been in favor. On the other side of the equation, if you had attended the last session that we did on this, some of the best performing factors have underperformed. Companies that had received target price upgrades, companies that had received earnings upgrades and had forward-looking growth were really the safe havens where the street was recommending you allocate capital towards in the way of revisions, have been really a safe haven. Likewise, RSI and Momentum and profitable large companies, I'm thinking of your Microsofts, have been holding up quite well. This week flipped the opposite direction. Now, if you're wondering how I'm interpreting all of this data, every one of our factors is interpreted in the exact same way. I'm going to click in. We're going to see the transparency of what's going into this basket. And what we're doing here is for our 1676 securities that are in our overall universe, and this is just the top 60% of the U.S. by market cap and then top 35% by liquidity. So you've got a pretty good range of large and small caps, generally speaking. They are traded. These are active securities. We're ranking from highest to lowest on each metric. And what we're doing here is we're sorting into 5 quintile buckets. Our methodology is always the same. I'm actually going to zoom out a little bit so that you can see the full screen view. Our methodology is always the same. We go long the top quintile, and we go short the bottom quintile. So when I'm saying down here at the bottom that our long-short performance of this factor today is down 0.95%, what it's really saying is our low vol securities are outperforming our highly volatile securities. So when we look at what happened over the past week, the fact that we're kind of coming back the other way may make a little bit of sense since 1 month vol was such a dominant factor, but throughout the course of this risk-on environment, we're seeing some of the more volatile plays coming into action, and that makes sense. On Monday when we got the optimism injected into the market from the Moderna vaccine, it seems like everybody was in a buy everything mode, and a lot of the companies that were on a discount, your value names, your high leverage names, saw a big comeback. Now, where I go from here after I've assessed what's happening within the overall market is dependent on where your investing strengths may lie. I have the ability to dig in a little bit deeper and say, okay, I've been focusing on tech. What worked within tech? And when I filter down into a particular sector within FTW, I can learn about where the priorities were. If we check out where healthcare wound up, it's a pretty similar story of leaning into the companies that have seen those big expectations. Now, if I click into this individual set of companies, I can see specifically who these high sell-side expected return names are. And what I can do here is I can export them into Excel, a portfolio, or a worksheet. So one area that I might want to focus on is in the top quintile of expected returns, just to find a company that could help me understand where to go next. I'm going to export them into a worksheet. I'm going to say top quintile of healthcare sell-side return. Create that. And now I can dig into that on whatever frequency I choose. Now, the way I'm going to approach this specifically is by loading up the function watch. Watch is our top-down greening function. It is a way for you to navigate a universe from a variety of different dimensions. I'm going to load that worksheet that I just created in Watch. And now I can see among the companies that fit into that top quintile that have generally outperformed, who are these companies? Well, I don't know them all off the top of my head, but what I'm going to do is group them into their respective industries. And now I can see over the past month, the healthcare services names have done well, equipment manufacturing has done well, generic pharma, the companies impacting in the supply chain have done well, our spec pharma and our biotechs have done quite well. So if we drill in on our spec pharma names, we take a look at any of these companies, we might want to dig in a little bit deeper. So taking that factor lens and identifying an opportunity is a pretty powerful way to approach it. But we have other ways that are going to be even more relevant during today's investing environment. Now, I'm going to give you an early preview right now before we even get to the drive scorecard approach of where the virus function is going. When you run VRUS today, which is our coronavirus tracking dashboard, we have maintained for you a list that, to be perfectly honest, has not updated much since we rolled out this function at the beginning of the pandemic. This list of companies was handpicked by our own Bloomberg internal Bloomberg intelligence analysts, and while generally accurate, you can see some of the biggest names that have been, beneficiaries of the virus and potentially harmed by it. from a business perspective, it hasn't been updating. I'm going to run in beta just so you can see what the update will look like after the long weekend. We have developed a technology which we are extremely excited about, and I'm sharing for you for the first time, which will allow us to look based on news flow at who is currently affected by the virus. So as I look at this change in activity, for those of you who are familiar with the trend function, TREN, we are using a similar scoring system to show you where there has been an uptick in news publication about a particular company. What we've also added in here, and I'll come back to this, is a set of alternative data to help you track the virus. So while I started at FTW, I saw that certain names have done well. I went into a particular sector. I found names that have been doing well in that sector. We're also giving you the ability to see, based upon news flow, who are the companies that are thematically impacted right now by the virus. And if I scroll down through this list, I can see AstraZeneca. They were, a big beneficiary. Splunk, another interesting name that's been, talked about quite a bit due to their technology infrastructure. And if we go through this list, you're going to see a lot of the companies that make sense thematically. And these will update as you progress through the, the day and beyond. So with that, I'm going to pick a company that's standing out to me at the top of the list, Palo Alto Networks. Palo Alto Networks has seen quite a bit in the way of traffic, so to speak, since there's been a lot more internet usage. If we go into the news on Palo Alto Networks and we see what their key themes are right now, their cloud strategy is being vindicated by remote work. They are, they just reported earnings. And now when we take a look at our news function Drive, we're going to learn what's going on behind the scenes with them. To load Drive, which is our stock-specific scorecard, run DRIV. Now, what Drive seeks to do is reverse screen through Bloomberg to show you what you might miss. Just like in FTW, we're showing you which pockets of the market are in or out of favor. Just like in the news trend search that I just showed you within the virus, we're showing you who's being impacted. Drive is doing the legwork for you to show you which characteristics are most important to focus on for a particular company at a given point in time. I'm going to make this a little bit bigger and zoom in for you. I am on the new tabbed version of Bloomberg. If you don't have this yet, it will be coming to you very soon. Now, to frame this screen, just so you can understand what we're looking at as we dig into Palo Alto Networks, we're focusing in on Palo Alto Networks in the context of the United States. They are a U.S. company, and the majority of their peers are